Welcome back to the channel, everyone. Thanks for coming in. I'm sorry I had to take 2 weeks off for some health issues. Not an issue. I'm back and strong. I apologize for being absent, but not to worry. There were some good trades, but some of them were not easy to get setups because of how slow the currency was moving. The currencies were moving on the weeks from the days from February 11th to February 27th. So for about 15 days, actually, almost, the setups weren't clear and the movements weren't clear because, as everyone knows, there's been an attack on Iran. The precious metals have gone down, or at least correcting. I warned everyone about that too. I actually went on several YouTube channels in the last days of January, 26th and 27th. I'm talking about YouTube channels with huge traffic and millions of subscribers, that when I noticed that they were actively promoting the purchase of these precious metals like gold and silver, and I noticed that they were about to drop, I actually went in and commented advising everyone to be careful and to liquidate their asset holdings in the precious metals. But of course, I was flabbergasted, as usually happens on YouTube, where there's a lot of, let's say, not serious content, which I'm trying to push away from myself, right? Because I need to, you need to be able to make a distinction between real useful content and all that hype and false news and fake news, sorry, and useless noise, basically. Right, so let's get on with it. This was enough of an intro, 2 minutes and 27. So let's mark the areas. Here was where I published the dollar strength, coming dollar strength for the next weeks or months, right? Why? Because we had a first move up and a correction and a pullback. So I'm saying, okay, we need to get another impulse. We didn't get it until here. So this was the area that I was referring to earlier that was like lagging, right? Undecided. But needless to say, the following impulse came up, and then you had another big correction and another impulse up, right? And now you're getting another big correction here. What does this look like? Well, to me, it looks like a series of usable moves for intraday trading. But let's go back to the bigger picture here, which is the most important thing. Why did I publish in this area here a video about dollar strength? Because this is where this move here potentially could have ended, right? And I was right, as usual, because we came up and we did cross this trend on the daily, right? Now, is this definitive to say that the dollar is going to come and break this high, the 114 area? Well, not yet, but we did nonetheless break the smaller time frame trend, right? Now, if we have a consolidation here, like let's say, let me make this bigger. If we have let's say a bigger consolidation here, that is what will tell us that the more upside is confirmed, right? And so far, it seems what it could be doing. Now, how big is this consolidation and when it's going to come? Well, that's another question. That's another topic, right? Because this can come here and then consolidate, or it can consolidate here. Right? Or Option 3, it can come for a deeper consolidation and then leave. What does this mean? Well, it means that we will intraday trade it up and down, but we are now more biased toward dollar strength trades. So the dollar basket pairs, which I remind everyone are the euro mainly, but then also the yen, the pound, the Swiss, and the Norwegian and Swedish kronas. Not the Aussie, not New Zealand dollar, not the precious metals, but I forgot about Canadian dollar, sorry. So everyone should know this, right? In the dollar basket, there are these currencies: euro, pound, Swiss, Canadian, yen, Swedish and Norwegian, krona. And that's it. No other currencies in the dollar index. Clearly, the favorite pair to trade against the dollar is the euro because it composes most of the dollar index basket, and the charts are very similar, although in reverse. So not many brokers have the dollar index as an asset you can trade, but you can, some do, except the contracts are bigger. So the favorite would be the euro dollar, right? So basically, let's get on with it now. And what happened in the euro dollar? So what were the good trades to take on the euro dollar? Now let's pinpoint them, and let's go on the 1 hour. Actually, 4 hour first, and then 1 hour. So this is the area that I was showing I was showing in reverse on the dollar index chart that was lagging, right? So you didn't get a good trade up until this level, right? So your first good trade here was here at that moment, but this was very hard to get depending on where you were. But if I'm putting this on the 1 hour, let me show you. If I'm putting this on the 1 hour, this would have been, and you see this clearly in the Asian session, right? So what gave it away is that after all these days of consolidation, you broke out here and you had a pullback. Except this pullback happened in the Asian session. So that would have been Monday, March 2nd at 3 a.m. in the morning for me. I wasn't there to trade this, unfortunately. And what happened then is we went down, we continued to go down. So the first trade would have been in the Asian session, and then you had a pullback prior the New York session, and then another move down in the New York session, and then another move down in the Asian session. So basically, I didn't get any trades here, which was the best down move, right? But that happened. Sometimes that does happen. You get a trade in moments of the day where you're not at the screen or you're doing something else, right? But that, not to worry, because if we're going up on the dollar, like for the next weeks or months, and I'm talking about a move that takes the dollar from the 99 area to the 114 area, you know how many trades you're going to get if that happens? Plenty. So, and as a matter of fact, after this big drop that I didn't get any of, then there was another sell setup here, and that I took. So let's say if you measure this whole move down, I missed half of it, but I did get the other half, and then I closed it. Why did I close it? Well, because we are under a trend on the smaller time frame, and you will get a correction, right? So if I go on the 1 hour, you had this move finished here, then you had a correction and a extension of the move down, and then you started the real pullback, right? And this was a very, very good trade to get. Why? Because you had a classic ending pattern, right? Which would have been this one. Impulse, correction, extension, impulse down, pullback, and continuation, right? This is a classic. Some of you recognize it as a head and shoulder pattern. It's not perfect. You can call it another name if you want it. Whatever name you call it, the concept stays, right? That's what you have. Impulse, correction, another impulse or extension, as I call it, end of the move, first move down, pullback, and then continuation. And this is your setup, right? How does this work as a setup? Well, either way you trade it, it's going to work, because if I'm here and I'm measuring a tool, and let's say I'm getting at the break of the shoulder, the neck, right? Oh, sorry, I'm using the wrong tool here. Let's say I'm trading, I'm swing trading. I'm still getting a 1 to 3 risk to reward, right? But I'm not even sure you would do that. That would have been a trade across multiple days. You don't even have to do that. You can get a setup on the smaller time frame or get it higher, right? If you go on the 30 minutes, you don't need to put your stop all the way there. You can follow the pullback. There's a variety of ways to get in the trade, right? But you can follow the pullback and trade the break and make this your stop, right? And this your profit. And because we were expecting a bigger move down, you could have kept the trade, right, for multiple days, and that would have enormously enlarged your risk to reward. Because once you're certain that the daily move is going to come on the dollar index, right, and it's going to go on for the next weeks or months and years, well, you might want to get a sell on the euro dollar and keep it, right? And you're still in time, because guess what? Even if I put this on the weekly or daily and I'm opening a position here, I'm sorry, I'm switching back and forth from the dollar index to the euro dollar, but it's just to explain, right? Even if I'm targeting the 114, right, which is the break of the top, let's say hypothetically, let's say that I'm keeping a trade for a few years, right? And I open it here, right? And I put my stop here. It would still be a 1 to 3, right? But this is the weekly and daily. We wouldn't be trading the weekly and daily, right? That's silly, right? But let's say you get a point here, which is the lowest price that you can get, and you can reduce your stop loss, right? Let's say hypothetically, right? So let's say you're following this correction and you enter in the best or close to the best possible stop loss here, right? Entry and stop loss here, and you reduce your risk, but you keep your reward all the way to the top. Well, then all of a sudden, what do you have? Then all of a sudden, I'm doing this hypothetically, right? All of a sudden, you have an operation that is something like this, right? So 1 to 25 or 30 risk to reward, right? So can you do that? Yes, you can do that. On euro dollar, you can keep, despite the rollover cost that you will have every day, at the turn of the day and every weekend, which is counted as 3 days usually, you can keep it. And because your account is going to grow considerably over time, right? Despite the cost, the daily costs can be insignificant. Well, at some point, you might get a huge correction or a huge pullback, and in that case, that is the problem, right? I mean, this is too big. But let's say you have this starts going impulsively, and then you have something like this, and then you get a big pullback before it continues. Well, this would be a problem, right? This pullback would be a problem because this would be many weeks or months in which your account goes down. I mean, you're still in profit, obviously, right? But you have all these costs, so you wouldn't keep it, right? So let's go back to practical. Now, what are we doing here? Well, if I'm going on the 1 hour, the euro dollar is correcting, and I expected this correction because we are under this trend, right? So either way you put this trend line, right? Either you start from here and then you have this big correction. This is the biggest correction in this move. So I'm going to mark this as the last impulse. So this is why my trend line is connecting the bottom with this, right? So I believe this trend line is actually accurate. This is why I put it here. And after we broke down here, I expected a correction. I expected a correction sooner, something like this, but that didn't happen, which is a good sign for us, because what this means visually is that this impulse here, this impulse here actually broke the beginning of the impulse in the other direction, which means that the downside on the euro dollar is confirmed. Now, what are you getting here that it's correcting right now to the upside euro dollar? Well, this is fantastic, because if you get this short here, and the higher you get it, the better it is. I mean, it can only come to here. It can only come to here. It can come to here, or it can come even higher. The higher you get the short, the better it is. And you want to consider opening, more than one position and keeping one long-term. Or even better, if you have a long-term trading account, which is recommended if you differentiate the types of account, you can keep the long-term trading account position open for the coming months. Yes, that's what I would recommend doing. But if you don't, you can put two positions and you can keep one of them for long term, and the other ones you will close and reopen shorting the euro dollar, right? So remember that. But either way, this is what we will be doing actively next week. We will be looking for new short opportunities on the euro dollar, right? Once this moves. Now let's look at it on the 1 hour. How does this look? Looks good to me. Now we don't have divergence here, right? So, and bear in mind that I'm using the regular settings MACD. You don't need to tweak anything. This works perfect for the euro dollar. I just changed the colors because the original colors are tremendously annoying, but the settings are the same. So you have the smoothing at 9, and then you have the 12 and 26, right? And it's wait, actually, let me open this for you. 12, 26. 12 is fast, of course. Slow is a 26 period. 9 is smoothing, signal length, and the moving averages are exponential. That's the original standard setting MACD you can get for free. You don't need to tweak it. You shouldn't tweak anything until you have lived with an indicator for at least a year. Otherwise, you don't even know what you're doing. And sorry, I'm being a little blunt and direct here, but that's the way it is. So let's go back to it. So is this, oh, where did the MACD go? It walked off. I erased it. Okay, let's open it again. Here, moving average, convergence, divergence. Okay, good. So as you very well can see, you have no divergence. So I'm expecting more upside on the dollar. Ideally to the previous week's high. That would be a really good point to short. If it comes higher to the previous week's high, so the one before that, that would be even better. I'm not counting on it, but we don't know that. We'll have to see on the way as this moves up, right? It's gonna come here. It's gonna show us divergence or not, and we'll see what to do with it. Now it's too early, but I'll do a midweek or beginning of the week, let's say Tuesday, something like that, video for an update, because this is a key level for the dollar index and euro dollar. Pound the same, let it come up, more, no divergence. So it's going to come up more, ideally to here, possibly even higher, but unlikely, right? But definitely one more up before the short. Let's check the pound on the 4-hour. Yeah, this would be a great level for another short on the pound. I don't see it coming higher than that, but again, we'll have to check. Dollar CAD. We'll see this during the week. We should be getting a down trade here. I'm not sure if it's dollar related or CAD related, but we should be getting a trade here next week. Same for dollar Swiss. Also because we're at key levels here. This is actually very interesting because, as you very well know, the Swiss is one of those currencies, together with a yen pair, which might, to which funds and big players might turn to, or usually turn to, if not as a safety haven, as opposed to precious metals, which also are always kept in the portfolios in the measure that it's useful to keep at that moment. But let's not get too much into macroeconomical details or other things that are not directly related to intraday trading, as far as I'm concerned. But you can see that we had, for the Swiss, sorry, I was looking at CAD, we had quite a big up move. So Swiss franc appreciation, right? And if now we are expecting, and this I'm talking in general terms, right? If now I'm expecting a big up move for the dollar index, for the dollar in general, well, we could expect more downside, more an upside turn on the dollar Swiss, right? Makes sense. Structure wise, it makes sense. We've been coming down on the dollar Swiss as of 2015. I'm sure everyone remembers the 15th of January date where they took the peg off the fixed relation. That would have been a huge trouble if you had an account and you didn't know where to position yourself with the Swiss franc. But in any case, let's not remind ourselves about that date. But what I'm trying to say is we've had a dollar Swiss down move for many years now, right? 10 years now. So I'm thinking that this up move, structure wise, is very possible, because in all these years we could have broken the top. We could have broken this bottom, right? Which is the all-time low, but we never did in 10 years. So I don't think it's going to do that. And in any case, not now. I'm expecting dollar strength right now. Now, it's a battle, right, between the dollar and the Swiss. So I'm not sure that's going to happen. And you know, you have this trend to be broken. You have this trend to be broken and this trend to be broken. If it breaks this, we'll consider buying the dollar Swiss until this level. And if it breaks here, we'll consider buying more to this level. So there's many things to look at, and it's not happening right now, but we'll keep an eye on this as well. So dollar strength, everybody else's weakness, possibly including the Aussie and the New Zealand as well, although they had their moment of glory, which is continuing to go. And plus, as I mentioned earlier, they don't belong in the dollar basket. So I'm not gonna recommend trading the dollar, Aussie dollar, AUD, USD for shorts, and the New Zealand against the dollar for shorts, like I'm recommending the euro and the pound, right? We'll keep an eye on those, but we're not shorting them right now. We'll see what they do when they do it. Gold, we had downside continuation as expected. I mentioned this, published this, commented this. I commented this before it happened. I advised everyone to sell their silver and gold positions around the 27th, 26th of January before, just a couple days before, but nonetheless before the drop actually happened. And when this was happening, I also mentioned in my previous video to look at the 618, 786 retracement for the new drop, which it happened. I hope some people were able to use my advice for profit, and silver the same, right? You also had a very beautiful correction underneath the trend in silver, and the same is true for gold. Yeah, if you get this and draw it properly, you'll if you pull a line here, right, you can clearly see that it broke the trend to the downside, which on its own doesn't mean anything. But after you had a huge consolidation, right, and you can see the moving averages slowly positioning themselves. I'm on the 4-hour here, right? So there's plenty of time to decide how you want to position yourself, right? Because it's happening on a few days. But you can see the trend lines, the moving average lines, which in my settings are 21 is the slowest, then 50, the mid, and 84 is the longer term period. And then you have the really slow one, which is a 200, right? These are my settings. Actually, I'll share them in another video. We'll go through that. But the point being is that you have all the time to understand what's happening here and to get in the trade, right? So this would have been your first setup, second setup, third setup, fourth setup, fifth setup. You had 5 setups on gold to go short, and on silver, probably less. Yeah, more complicated, but either way, you have a short setup marked. That would have been my short setup marked on silver. That would have been last Friday. I have predefined instruments to mark my take profits, and they're all basically 1 to 3 and 1 to 6, and I'll explain that in another video or later on, anyways, in these videos, why I'm keeping 1 to 3 and 1 to 6. But I was doing other things in the last 2 weeks, so I only took this trade, and that's it on silver. On gold, I took other trades. They're not marked, but they were taken. Then oil. More upside, but just one trade next week to break this high, right? Because we still haven't had a move. Can this be on its own? Yes, it can, because there's a 1, 2, 3 inside it. So this can be the end of it. But to be honest, I don't think so. So we'll take the upside. So one trade next week, and then we'll observe. And we'll observe the divergence, right? And we'll decide, because the chances that it comes for a big down move to replicate this move are pretty high. And all of this would just mean that we are, in a thought mode, consolidating for more upside. Can oil go to 200? Yes, of course. There are geopolitical reasons for it to do so, but we're not getting into that, right? We're not taking a short or long position based on the news. That's ridiculous. We look at the chart and we will trade it accordingly, right? So next week, short upside, and then we won't keep any longs anymore, and we'll see if we get a short setup, because that might be a good one. 1 to 3, 1 to 6 risk reward. Also, natural gas is also interesting. And then I'll call it a day. But because I'll still be here next week, this actually looks really interesting. Why am I looking at natural gas? Well, let me get rid of all the drawings. I'm looking at natural gas because we had a huge move down, and then a series of impulses, pullback, impulse, pullback, impulse, pullback, impulse, and then it reversed the last one. But it's stopping right here, right? It didn't fully reverse. Now, the most likely scenario is that it, sorry, such a bad drawer. The most likely scenario is that we're gonna come and break this low. That's the most likely scenario. But what if this is what I call a slow start for a big up move? Is that possible? Yes, that's also possible. If I'm on the weekly, I have divergence between these two, and it's confirmed on the weekly, which makes sense because it broke the low, the beginning of the last impulse, right? But if I put this on the daily, we have an incongruent, inconsistent, not coherent MACD information, because we don't have divergence between these two, right? In my experience, based on the Forex pairs, it is relevant if I switch to the smaller time frames and I get a different MACD information. I will look at the smaller time frames to make my decision. But natural gas is a whole different thing. So, and plus, we did go and break the beginning of the beginning of the last impulse to the upside, right? We did break it because we came lower, and that is relevant. But we did not break this area yet. So if I'm considering this as a whole, right? Well, then I don't have divergence, and I don't have it on the weekly either, right? So actually, let's check. Yeah, I don't have it on the weekly either, right? So this possibility still exists. And so what are we doing? Well, we're going to be looking for both setups, both long and short. We'll take the shorts as they happen every day, right? So, you had a setup here, you had a setup here, you had a setup here. Short, 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 right? All happening in the New York session, by the way. And then you had a buy setup here, end of the New York session. Then you had a sell setup here and a sell setup here, right? So what are we doing here? Well, this is going like 1, 2, 3, 4, 5. So I'm now looking for a buy setup on natural gas. Even if it comes to this area for more down, this to me looks like buy. So next week, I think we will go for buys on natural gas. And you should be getting a good setup already on Monday, Tuesday at the latest anyway. So that's it for today. The yen pairs. Sorry. Interesting. We need to have a look at these. So why am I looking at the yen? Okay, my yen, dollar yen basket. Sorry, my yen basket just disappeared. Okay, that's very annoying. Okay, hang on. Let's erase the drawings. Let's call the Japanese yen currency index. Oh, they changed the logo. Okay, maybe that's why it disappeared. Anyways, let's put it back up because otherwise I'm a little OCD, so I need to have everything in place where I want it to be. Now let's look at the dollar, the Japanese currency index. So we broke the low again, right? Key level here with one last drop, and then we broke back inside the level, and now we're pulling back. Now, are we coming back down, or is this just a pullback? Both can be happening, but now I'm thinking yen strength, right? So what do we do at this level? Well, we'll look at how it goes. Here, this is a place we will be looking for buys, right? Because you have a 1 and a 2. That doesn't really make sense on its own. You'd need a 3, right? At least to this level or to this level, which are the weekly highs of the previous weeks, right? So this is exactly where we will be looking. And this is from Monday, guys, right? This is very important. We will be looking for Japanese yen strength, which means I would skip the dollar yen for the sell just because we are also looking at dollar strength, right? But I will for sure want to get the pound sell from these levels. The Canadian, you can see the structure right here, at least back down to this level. The euro, Aussie, New Zealand, I would skip these. I would go with pound, Canadian, and euro for shorts. If euro doesn't work, because we are right now getting some euro strength against the dollar, but it's temporary, right? So I'll be looking at these. Actually, you want to put some, oh, they were there already. I thought so, right? These are my levels. So this is where I will be looking for shorts, right? This area here. Forgive my drawing, which is terrible, but either way, you still have the pound and the Canadian yen, pound yen and Canadian yen to short if you don't like the euro either. So that's a lot that I've covered today. Thank you for coming back to the channel. It's 40-minute long video. I hope it will publish it. I don't think it will, but let's try. And I'll give a really good update next week.